Hello, everyone. Good morning. Thank you for joining me on this ride today, especially on such a hot day. I hope you are well and staying cool. We will be starting our adventure in a minute, so buckle up, have your coffee ready, maybe a notepad handy. My name is Nicolette Magnet, and I work as a revenue examiner in the Sales and Use Tax Audit Division. Today, we are going to walk through some useful information about sales tax and use tax, specifically for those in the car wash business, vehicle repair, and roadside services. Just a heads up, we have turned off your microphones so things don't get too chaotic. But if you have any questions as we go along, you can put them into the Q&A box on the side, and we will address them at the end of the presentation. Please do not include any personal information when submitting your questions. I have to give a quick disclaimer. The information in this presentation is intended to provide general information and will not go in depth about department policies and practices. The information is not intended to supersede or alter our statutes and regulations. Now, to start, I'd like to point out that all the information on car wash services we will be discussing today can be found on our website under Special Notice 2015-4. All right, let's make sure our car is in neutral, the windows are up, and let's get rolling. If you are cleaning cars, no matter if it's a quick rinse or one of those deluxe detailing packages, it is going to be taxable. Now, here's something to keep an eye on. You want to make sure that you're reporting all your revenue streams. What is a revenue stream? It's just the money that you make from a specific kind of service. So if you offer basic car wash, a wax, interior vacuuming, engine cleaning, each of these counts as its own stream. Now, of course, what you see on the slide isn't a comprehensive list, but you might offer other services or bundle things differently. But what we see sometimes is one or two categories not making it onto the tax return. And of course, that is not on purpose, it's just an oversight. So it's a good idea to do a quick check to make sure that all your services are accounted for on the report that you use to file your returns. Now let's talk about exemptions for a bit. There are three types of entities that fall into this bucket: U.S. government agencies, Connecticut state agencies, and nonprofit organizations that qualify under 501c3 or 13. While there are other types of nonprofit organizations, only these two types would qualify for sales tax exemptions. Now, these entities can just say we're exempt. They have to show it. And here's how that works. Government agencies would have to give you a Cert 134, while qualifying organizations must provide a Cert 119 plus a copy of their IRS determination letter to prove that they are legit. The way of payment matters as well. They can use either a check from the organization's account or a credit card issued in the organization's name. This means no personal checks, no personal credit cards, and definitely no cash. If you're the seller, hang on to those documents and match them with the related invoices. And I suggest grabbing these certificates from our website because they come with detailed instructions whether you're a seller or a buyer. And a quick shout out to fundraising car wash events. I'm talking about the ones usually happening in a school parking lot, maybe to raise money for the football team or out front of the local fire station. I've only ever seen them in movies, but apparently they do happen quite often. So if you're offering services at one of these events and charging $20 or less, those sales are not subject to sales tax. Now keep in mind that the organization would have to collect the payment. So it's just a small break that makes a big difference for those trying to raise money for a good cause. Oh my goodness. So this absolutely blows my mind. It's the mythical car wash in the Enchanted Town. I've never seen or heard of a gas station offering free car wash with gas purchase. But in case it does exist, since you're not actually paying for the car wash, it wouldn't be subject to sales tax. Free means no tax, simple as that. We sure do love free. And if you keep missing out on the free car wash just like me, all is not lost. We still have discounts. These could be in the form of coupons, promo codes, loyalty rewards, percentage off deals. They all basically do the same thing. They bring the price down before the sale happens. So let's say the car wash service normally costs $25. With a $3 coupon, now the service is $22. You will use the $22 to calculate the sales tax. You don't charge tax on the original price. You always use the discounted one. Now, if you're a business, you're also going to make some purchases. Let's discuss that. Your business will pay sales tax on anything used day to day. So like soap, sponges, equipment, and even complimentary items given to the customers. Same goes for things like your POS system, computers, printers. So if it's helping you operate your business, it's getting taxed. However, if you're buying items to sell separately to customers, like bottles of car wax or air fresheners, you can skip the sales tax at the time of purchase. You just have to give your supplier a resale certificate. This will tell them that, hey, I'm not going to use this, I'm going to sell it. So just make sure when you sell these items, you list them on the invoice. Now, a quick note before we shift gears to repair services. Resale certificates are super handy, but only if you're in the business of selling the things that you're buying. So if you're picking up items you plan to resell, you're good to go. Here's the catch. If you buy something with that resale certificate with the intention of selling it, then later decide to use it for your own business, so you're pulling it from inventory either for personal use or to use in your store or shop, you will need to self-assess the tax on it. That means that you calculate the tax at the usual 6.35% rate and remit use tax on that item. Since it wasn't resold, it makes you the end user. Okay, our ride is looking fresh and glossy, but before we steer towards repair services, let's make sure that the car wash hasn't done any damages to our car. Just like a car wash, repair services are taxable. Whether you're dealing with mechanical fixes, electrical work, body repairs, or just some routine maintenance, if the service is provided, it's subject to sales tax. Now here's a bit of a curveball. If the repair is covered under warranty contract, then you don't charge tax at the time because the customer already paid tax when they purchased the warranty. So the repair and any parts used during that process aren't taxed again. And then there are those extra fees we hate so much, things like disposal fees, hazardous material charges, environmental fees, service or miscellaneous charges. Even if you break them out separately on your invoice, they are still considered part of the sale. That means they get wrapped into the taxable amount. So let's break it down with a simple example. So say the repair costs $350, you charge $10 disposal fee and add $30 service charge. Now you don't just tax the $350, you tax the entire $390. So every bit of that total is part of the taxable sale. Now, when you write up an invoice, make sure it's clear what's what. It should show which charges are for integral parts, which ones are for labor or service, and what the fees are. That kind of detail keeps everything crystal clear for you, for your customer, and anyone reviewing your records. Now, I said that you should separately state the charges for integral parts. What do I mean by integral parts? Basically, it's any car part that stays a distinct, recognizable thing. Even after it's installed during a repair, it keeps its own identity. So think of things like filters, battery, belts, muffler, tires, wiper blades. These are the kind of parts that would be listed separately on the invoice. Right, so let's see how resale certificates come into play. If you're the service provider and using integral parts to fix a customer's car, and those parts become part of the vehicle, you can buy those parts tax-free by giving your vendor a resale certificate. That is because you're not the end user. You're passing the cost on to your customer, and you'll be charging them sales tax on it when the job is done. If you're a dealership or rental company, and you send one of your vehicles out for repair, you can purchase those repair services and parts without paying sales tax if the vehicle is being held for sale, lease, or rental as part of your regular business. Once a vehicle is removed from inventory, the resale certificate can no longer be used. You must pay sales tax on both parts and repairs in that case. Additionally, the certificate cannot be used for bulk purchases, such as drum-sized quantities of oil. And here's another scenario. If you run a shop and outsource repairs to a specialist, let's say you send out a vehicle for a transmission work, you can still use a resale certificate. You would give the specialist the certificate, pay them for the repair, then turn around and bill your customer, charging sales tax on the full amount. All right, so what if it's your service that is being purchased on resale? If someone hands you a resale certificate, that doesn't mean that you just accept it and move on. Here's what to look out for. The certificate must be fully filled out. You should check that the service you're providing fits within the type of business your customer is in. Like if they are a florist and trying to buy car repair services tax-free, something is probably off and you should not accept the certificate. You know that a florist won't resell that repair service. And just like you do with the exemption certificates, you should keep resale certificates in your records for at least 6 years. Now, you might find all this confusing, like who fills out the resale certificate, when, who gets it, when can be accepted. So if you're ever feeling unsure about any of it, you can always go to our website and look up Informational Publication 2009-15. This publication breaks things down with more detail, and it also gives you helpful examples. Now, if there are integral parts, you better believe there are also non-integral parts. And those are the things that don't stand out on their own once the job is done. These materials don't get installed as clear, separate parts. They're like the behind-the-scenes supporting cast. These would be things like cleaning fluids, lubricants, adhesives, paint, and even small clips or fasteners. Items like these you would not itemize on the invoice and therefore cannot be purchased on a resale basis. And that means that you'll pay sales tax when purchasing them. Again, life would be too boring if there was no exceptions to this. So let's say a customer specifically asks you for a custom paint job and wants a certain brand or color that you don't normally stock. Now you have to purchase it just for that one job. As long as you list the cost of that paint separately on the invoice, you can buy it using a resale certificate. That way you don't pay the tax when you purchase it. You'll collect the tax from your customer the same way you would do on integral parts. If you have repair work done outside of Connecticut, but you're bringing the vehicle back to use in Connecticut, you are responsible for paying Connecticut use tax on those repairs, even if you didn't buy anything here. If you already paid sales tax to another state, Connecticut may give you credit for that, so you won't be taxed twice, but only as long as it fits within the rules. So for example, if you paid $1,000 for a service in another state and paid $50 in sales tax there, you would owe use tax in Connecticut. Here's why. Connecticut's rate is 6.35%, which would be $63.50 in taxes on the $1,000. So you would get credit for the $50 paid to the other state, and you would owe Connecticut $13.50 in use tax. If the tax rate of the other state is higher than our 6.35, then you won't owe any use tax here if all the right conditions are met. Now we are going to quickly mention some basics about towing and road services. Just like repairs and car washes, these services are taxable too. It doesn't matter if you're using a wrecker or a flatbed truck, it counts as towing. However, if you're using a transport trailer, it's not considered towing under the tax rules, and that won't be taxable. So it's more about the method than the mission. Also, when you're providing towing or roadside services for motor clubs, the same rule applies. Those services are still taxable. Similarly to repair services, tax is applicable to all fees and surcharges. And to wrap things up, let's go over some useful general information. If you are looking to get your business started, you can go to business.ct.gov to find information on how to start a business, including a customized checklist and a virtual assistant that can help answer general questions. So whether you're starting small or aiming big, this site is a solid starting point. Before conducting any sales in Connecticut, businesses must register for a sales and use tax permit through MyConnect. The registration comes with a one-time fee of $100. And once you have your permit, you have to make sure that it is displayed at your business location. The permit stays valid for 2 years, and as long as your business doesn't have any outstanding liabilities or missing returns, it will be automatically renewed and mailed out to you. If you do not receive it in the mail, it is always available in your MyConnect account, and you can print it out from there. Now, once you're registered for a sales and use tax permit, you will have to file and pay your taxes electronically through MyConnect. Timing is extremely important. The due date to file is always the last day of the month following the end of your reporting period. So if your reporting period ends on November 30th, you would file by December 31st. Should that day fall on a weekend or a holiday, the deadline shifts to the next business day. One last but very important information. Even if you didn't make any sales during a reporting period, you're still required to file a return and report 0 sales. Now, before we finish up, I'd like to mention a few other helpful resources. We know taxes can feel a bit overwhelming, so we've made it easier with 2 go-to spots right on our homepage. The first one is the Taxpayer Education Center, and the other one is the Business Resource Center. You'll find both at portal.ct.gov/DRS. These pages are loaded with tools and tips to help you file and pay your taxes. And if you're the kind of person who likes learning through events such as this one, you'll definitely want to check out our tax events calendar in the Education Center. That's where we have our running list of all our upcoming webinars and library and in-person events designated to help break down tax topics in a clear and approachable way. Now, today's presentation is being recorded, and you'll be able to find it in about a week in the Taxpayer Education Center under live webinar recordings. And if you're looking for an easy way to stay informed, you can also subscribe to our quarterly published DRS Tax Topics newsletter. It's a convenient way to stay in the loop on seasonal tax matters and legislative updates. And you can use this QR code on the screen to subscribe, or you can visit our website at portal.ct.gov/DRS. DRS. To get in contact with us with any questions or concerns, you can reach out by phone at 860-297-5962 or by email at drs@ct.gov or through MyConnect by clicking the More tab, going under Correspondence, and selecting Send a Message. To stay up to date on any changes or events, you can also find us on social media. And we covered everything, so I'm going to let you take the driver's seat. If you have any questions within the scope of what we have covered, feel free to drop them into the Q&A section. Now, please note that I aim to provide accurate information. If I'm unsure of the answer and your question isn't addressed or still have additional questions, I encourage you to reach out to us at the number or email listed in the earlier slide with as much detail as possible. And I don't know if there are. Okay, so is the deductible on the extended warranty taxable? Yes, it is. And if you don't have any questions today, you can always reach us later on. But we're gonna just hang out for a few minutes to see if anyone else has questions. I would like to believe that we covered everything that you needed to know, and that's why you don't have questions. All right. Okay, there's another question here. Where do I go? Where do I go to find specific rules about leases and trade-ins on leases? You would go to the research library. Where does the business permit need to be displayed at your business? It has to be somewhere where everyone can see it. It has to be visible to your customers. So maybe in the window, that's where people usually put it. But as long as it's visible, you should be okay. All right. So that concludes our presentation for today. Thank you again for being part of this session. It's been a pleasure for having you with us. You'll be receiving a brief survey, and we genuinely welcome your feedback. We would also love to know if there are any future topics that you would be interested in. And with that, I am wishing you a fantastic rest of your week. Stay safe. Bye-bye.